Good morning, everyone, and welcome to our pre-market trading podcast, where we are going into the biggest names that I have on the watchlist, but also trying to make an update on some of the names that we have been looking for, and also the overall picture on the market. And what an ugly action that we have since Wednesday last week, and with the market and especially tech names. Tech names had a big correction, and one of the questions that we can ask ourselves is if somehow there were clues and if somehow we could manage our risk and anticipate the move that we saw on the market. So starting, for example, with Apple. Apple that last week on Wednesday saw a big, ugly, bearish reversal candle and giving a follow through for downside all the way on Thursday and on Friday also with a big move down, but they were able to buy the dip and push price back above. So we had a 3 days big, 3 days down, and yesterday also a downside day with stock losing down more than 6%. Big question is if somehow on Wednesday was able to anticipate this and actually before it happened. So not sure if we can anticipate the future or predict the future. No one really can anticipate the future, but there were clues. And one of the things that I would like to highlight you is the video that I posted on Wednesday. Okay, on Wednesday on our Trading in the Morning YouTube channel, free channel that anyone can join and sign up free, okay, to watch the videos. Around 8 a.m. I have a video every single day, and on Wednesday I ask this question: are tech bulls getting tired? And the most focus on this was that the market was really ahead of itself, so it should pull back. This was on Wednesday, 8 a.m. US New York time. The market opened at 9:30 a.m. So this video was 1 hour and a half before the market opened. And looking for the action that we saw on that day, especially on Apple, big pullback started. So the Wednesday action was very good. And you can look for other names, the cubes. For example, let's look into the cubes. Exactly the same thing. Red day, looking for Facebook, pullback, coming sessions, Netflix, pullback, Amazon, pullback in next couple of sessions after our Wednesday analysis. And the next big question is if you were able to manage your risk wisely, and volatility also popped, and how could you have managed the risk? And then we had on Thursday at 8 a.m. we had risk management, your trading key. And on this video, please review it. If you miss it, please review it. There are a lot of tips how you can manage your longs and how you can flip into the short side and play with volatility spike. I mentioned here that you could use VXX, for example. Let's see VXX. What happened after this video? So remember that those videos are at 8 a.m. before the market opened. See what happened. This was on Thursday. So the VXX, the stock gone up more than 30% and gave some more upside on Friday. And let's look for another one that I mentioned there. Okay, UVXY. It was up more than 20% on that day, on Thursday, after the market opened. And so let's look for another one, SQQ. Okay, for example, SQQ. SQQ is the ETF for the shorts on the cubes. And on Thursday, right after my morning video, the stock opened at $20.54, and yesterday it hit $27. So more than 30% stock move here. So that's ways to generate cash flow. And if you miss those two videos, it makes all the difference. And please review it. It was a well-timed analysis, and I believe that it's impossible once again to predict what the hell is going to happen to the market next. But there are some signs, and this was a very, very good way to manage the risk. So now what? The big question is now what? What the hell is going to happen? Yesterday the video was looking into Friday lows and leaders, and on that video I said that I was expecting an oversold bounce. This morning we are seeing that the futures are bouncing. We have Nasdaq up 1.3%. We have SP 500 up 0.6%. So we are bouncing from the 50-day moving average. So I keep the same analysis that I said yesterday. I'm expecting a 1, 2, 3 days bounce. I compare this situation on the markets very similar to the situation that we saw on June. So we had a correction, big move up correction. I'm expecting 1, 2, 3 days bounce, and from there we will reevaluate something similar to this while we are above the 50-day moving average. If we break below 50-day moving average, so right now, for example, on SP 500 futures, you look for these overnight lows and the 50-day moving average. We bounced perfectly from the 50-day moving average. Okay, right here, 50-day moving average, and has been holding the bull case scenario on the mid-term. On the short term, we are bearish. That's why last week I started saying that the tech bulls were getting tired. I said that you should use volatility names to start adding the position, and because I was expecting that pullback. Now I'm expecting a bounce that can last 1, 2, 3 days. No one can really predict. Here we had 1, 2, 3 days bounce and fading once again, printing higher lows on the 50-day moving average and resume back up. And that worked very, very well. Now we wait to see. The easy part of the trade, in my opinion, it's gone. If we break and stay below the 50-day moving average, the market can fall apart, in my opinion, and it will be very, very, very ugly. And we can go, for example, on SP 500 below 3100, and right now we are at 3350. So we can drop more than 200 points here, or even more than 300 points on SP 500 if we break below the 50-day moving average. Can that happen? Yes, it can, but we need to see it once again. So staying open-minded for any of these scenarios. So as summary, I'm very happy with the analysis that we have been making and providing, and I hope these videos helps. So don't forget to subscribe to the channel, and also to turn the notifications on, and also please leave your comments on the video that I would love to hear from you. So now where we stand, let's look for some of the names. AMD, for example, another name. It's below the 8 and 21 day moving average. Yesterday saw once again bullish options activity. It's one of those names that keeps seeing bullish options activity, but we need to respect price. Bull case scenario needs above 84, bear case needs below 73.9 to fill this gap. We also have the 50-day moving average at 72.1. Right now in no man land, it's above Friday lows, it's below $84, so it's below the 8 and 21 day moving average. While that happens, you are short on the short term, but it's on the mid long term, it's above 50 day, it's above 200 day, and so it's very difficult on the long term to be extremely bearish. But if we break below 76, we can go all the way to 72, for example, or even lower to fill this gap below $70. So right now, no action here. Waiting. Goes above 84, can trigger some longs for a scalp. Otherwise, right now it's a patience game. Beyond Meat, another name, last week gave a very nice scalp. Got some feedback from some traders that scalped long and on this spike, but also got traders that got in the other side of the trade when we break below 128.7. I was saying 128.7, look for a possible move all the way into 120, 121. So you always have two sides to trade, and we had the pullback from 128 all the way into $120, so $8 downside. And yes, what happened? Boom, back above 6% today. So it's one of those stocks that can continue to give either up and down, and you can scalp these. Okay, it's in no man land once again. Bulls needs above 139, bears needs below 120. You can play the range if you pay attention. We are playing here almost a $20 range, so you can generate cash flow that way. And playing the range 120 support, 139 resistance, and play the range. Breaks above and stay above 139, can skyrocket all the way to 150. Breaks below 120, can fill this gap all the way into $100. So can go $20 up, $20 down, but it's playing here at $20 range that you can also generate cash flow. Citigroup basically waiting no man land for now. It's consolidating, waiting for a break. Either breaks below 49 and bad things happen, breaks above 53, 54, good things happen, waiting here for a trigger one way or the other. DraftKings also yesterday bounced, keeping the bull case while above 34, holding 34, keeps the bull case intact, breaks below 34, can fall apart below 30. Otherwise, the path can resume back into the $40 area. And a new name that I had to the watch list is Kansas City Southern, KSUY, saw bullish options activity on the name. The stock at 185 right now on the pre-market, and looking for, while we are above $180, 180 is my line in the sand. The stock can go all the way can go all the way above $200. Breaks below 180, can go into 168, 169. So that's that's something to watch. Nikola, for example, it's another name yesterday after General Motors news, and stock opened at 46. Right after the market opened at 46. Those that are following me and know that Nikola was one of the names that I was looking some days ago. I mentioned that we had a gap to fill at $48 plus. So stock go from 46, fill the gap at 48 and skyrocket to 54. On these big moves, you trim profits, okay? You don't hold the bag. The stock made $80 move here, so it was an insane move. Close up 40% on the day, so you trim profits on the way up, you don't hold the bag. At least it's my way to trade. Tesla, told you yesterday, needs to hold 372. If below 372, can go all the way into the 50-day moving average. What happened? Was not able to go above 372 and closed right at the 50-day moving average, $330. And where is now? It's $20 up. So what is the lesson here? The lesson is, if it breaks a level, you look for the next one. You trim profits on the way down. When we hit the target, $330 yesterday, you trim your profits. And as I said, I was expecting an oversold bounce on the market. So if you are short, you trim the hell of the profits on your shorts and stay cash overnight. And that worked very well. Stopped perfectly at the 50-day moving average. Cannot get much better than this. So you trim profits there. Another name that I had to the watch list, Uber. Uber saw some bullish options activity. Needs above $35 to resume back into the 38. Right now the stock on the pre-market is at $34. Needs above 35 to resume back up. Bullish while above 31. Breaks below 31 can go back into 28. Otherwise, breaks above 35 can go all the way $3 up into $38, $39. And another beauty one, Workhorse yesterday. On the market weakness, relative strength. For those that are with me for some time, though that I've been mentioned this name, the target that I had into next year was 25. What happened to the stock yesterday? Boom, 8% move, and actually gone way higher than that. It new all-time highs, 23.85 above 22.9, and very near $25 target that I had for the end of the year and beginning of next year. So you have patience, you have time. On this move, what you do? You trim profits. It's always the same. 1/3 of the position goes out after the market open. Raise the stops on the rest. On the big explosion move that we saw yesterday, on the spike after the stock making new all-time highs, another 1/3 of the position goes out of the window, and you lock profits. Raise raise the stops on the rest. So you keep riding the momentum while it lasts. Stock right now at 22.3. Is it going to break higher? No one can predict that. But in my opinion, if I was long, as you know, I'm on holidays and I'm not trading, and I'm going to get back tomorrow into trading, but mostly next week. And if I was long, I would trim the hell off the profits, close the position, enjoy the profits, and move into the next one. But it's happy to see that it's giving follow through for the analysis that I gave some days ago. With the target 25 and looking for new all-time highs. It's new all-time highs yesterday. So there's where we stand. We are right now bouncing from the oversold conditions. The playbook was very good. Now expecting 1, 2, 3 days bounce. Let's see where first we need to hold the green morning that we are seeing right now. We need to see Nasdaq holding the green open. Otherwise, if it goes from green to red and breaks below yesterday lows and Friday lows, and some of the names can get very ugly and the correction can continue. You use exactly the same edges, VXX, UVXY, SQQ, but once again, I'm expecting a 1, 2, 3 days bounce. Let's see how many days. And but I'm expecting, and that's very important, I'm expecting a lower high. So it means that after the bounce, I'm expecting a fade. And that will be the game changer. Are we going to make lower lows or higher lows? And that will be the game changer. So right now is a tactical part. We are bearish, while on the short term, on day trading, you can scalp one way or the other. But on the short term, while we are below the 8 and 21 the moving average, you are short, but we are still above the 50 and 200 day. So on the mid-long term, we are still bullish. So there are always two ways to trade. Yes, the Beyond Meat and the Workhorse, for example, skyrocket. So gave more than 7-8% stock move with the market falling apart. So that's why yesterday I was saying look for the leaders and look for those that go from red to green, and those worked very, very well. So volatility is still too much elevated. It's fading right now this morning, but still too much elevated. It's above 30. I said that the bull case scenario on the bull market needs below 20. So we are on volatile pairs. We are going to the US elections on November. So expecting volatility to remain elevated. And there are always two sides of the trade, either longs or shorts. The important is to generate cash flow. And I believe and manage your risk wisely, protect your cash, raise the stops. Your stops get hit. Don't be concerned with that. The stops are there for a reason. You kept your profits, move into the next one. Breaks above, breaks back below, you go bearish, short. 1, 2 days pull back, you trim your profits, move into the next one, and that's the way to manage. Okay, so if you missed the last week videos, go review please. Leave your comments below on those videos. Thanks for watching. Don't miss the next episode, and be happy trading. Thanks everyone. Bye bye.